See how smart money at the peak, at the top, at the extreme has clearly positioned themselves for selling, has clearly positioned themselves for shorts, and we can say exactly the same about Ethereum's chart. Look at the significant rise, how we detect that major institutions start selling cryptocurrencies in the midst of a bullish frenzy while weak hands, retail investors, try to keep buying when it's already evident that we are in an uptrend. Here, you just have to ask yourself one question: which participant can buy so poorly? The answer is very simple. It won't be the major institutions. What you've just seen in the order flow chart was Ethereum's chart on the hourly time frame, basically the same chart you're looking at right now. What we've assessed is, after seeing a very aggressive rise, how at this point major institutions have taken short positions. Now, let's add to the context that we were evaluating that we were in the final climactic action of the impulse channel, range and tricky bullish climactic action, where if we are able to cross-reference this information, that's when we interpret that we're already at the end of this rapid, aggressive uptrend. I don't remember if we discussed this with the Crypto Insight team or in a YouTube video, but we analyzed this 15-minute chart to assess that in the bullish climactic action. If I'm not mistaken, we also did this on YouTube. Here, we identified climactic volume, buying intention, where evidently the price wasn't going anywhere, only to later identify how the price turned around very aggressively, and in that aggressiveness, we again identified a very significant volume zone. In other words, in this bullish attack, we see aggressive buying intention that doesn't work, and 4 candles later, we see the reaction from sellers with great strength and volume, where this time the price does decline. In other words, we've experienced a full rotation. So, after having such a tricky bullish climactic action, what we often look for is a contrary movement as a harmonic. What does this mean? We look for a bearish impulse that will get its echo. This is a harmonic. So, under this hypothesis where it made sense that the market could fall after seeing such a breakthrough, even after seeing this candle, because that's how smart money usually moves markets. That's where we start studying and not losing sight that major institutions in Ethereum have accumulated long positions throughout this range. This same group, the smart money that can manipulate markets and prices at will set those structures, those levels, where if they still want to push the price up, they will make their presence felt. So, with the order flow chart, we look for where the clusters were, those most representative price levels regarding this entire rise, and we identify them at $30.60 as well as $29.94. Hence, a very plausible speculation was, after this fall, initially expecting a reaction at the first indicated level, that corrects us to then go look for that echo up to the second indicated level. If it doesn't seem like those buys are pushing already, they're pushing already, okay, let's continue then, okay? So it's with Ethereum, as mentioned. A buying zone idea is the current one. The one we're experiencing now, it's this. Let's try to see if they're already leading us. They can perfectly do this. Well, they can do this, okay? Now let's study how this drop has been carried out, and going back to the order flow chart on the hourly time frame, let's zoom out a bit to not lose perspective. So, what we were analyzing was, and what you've seen, this bearish impulse that has gotten its echo. It's unmistakable, okay. What we've experienced then, what was interesting was to analyze this entire distribution, because in the end, as I explained before, we come from an impulse channel. Range, tricky climactic action. All of this in itself is a macro distribution, and over this whole area, I'm interested in seeing where those levels of strong transactional volume are. Later, we'll see how in Bitcoin it becomes very evident where those levels are, but in the case of Ethereum, and thanks to the volume profile, we identify that the price level of $3,130, this level here was a key level, a crucial level, where after experiencing the first echo, which made sense to start the correction around $30.60. This was the point where smart money, which has been distributing here, would want to push the price to look for that echo, because remember, when we come from an impulse channel, range, bullish, climactic action, we're going to look for the opposite impulse with its echo. So the obsession should be where they're going to want to continue the price, and that's where we find it in Ethereum. Now, let's zoom in a bit, and let's analyze how they've done it to us, because honestly, as it approached the key level, we see how sellers were already making their presence felt, and it's a sale that frankly has managed to bring down the market. That said, we already see the second impulse. In other words, we see the echo here, and that echo is already impacting us in key areas. You'll see it clearer like this. Remember that for Ethereum, the level of $29.94, I've already identified an important node here with order flow. It was a key reaction point, so key that look at what a good reaction the price had on its first contact. Basically the same as it did at $30.60 on its first contact. Having already remembered that we've been observing and how crucial the level of $20.94 is, let's draw the level on our chart to have it as a reference. Okay, now look. See how in that aggressive drop, pure selling appears here? You just have to look at the volume and the delta. Clearly red selling. Here the beat has a strong presence and instantaneously impacts the price. Over a key level explained in the previous video, a large selling volume appears that immediately isn't able to push the price down, considering that this bearish attack is the harmonic of an impulse. So, the level is going to continue being crucial as it was at $30.60, even though they played with it at the time. All right, that's good. It's something healthy. Just as here we see this escape in the form of wicks, because these are really wicks, there's no problem at all. So now, let's cross-reference this information with the Bitcoin chart, which will allow us to have a much broader, holistic view of what could happen in the short and medium term in crypto. But first, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Now, in the Bitcoin chart on its 15-minute time frame, here we were studying, just like in Ethereum, the fact of coming from a bullish impulse followed by a channel, accompanied by a range where Bitcoin's bullish climactic action already alerted us that things are happening here. However, we must never lose sight that we come from a macro structural trap, which we'll talk about later since it will have great relevance for the medium and long term in crypto. And if we zoom in a bit, these two blue-colored zones we identify as highly relevant areas that we saw in order flow where significant volume participations were present. And that helped us see such interesting information as speculating that at those price levels, around $62,848, we would have a reaction. Specifically, in the last video posted on YouTube, we were observing that this trend line, when the price was at this point, could be broken. Here we saw a key level as a reaction zone. So we speculated that from here we could correct to look for the origin of the breakout at these levels, to then go look for the echo of the bearish impulse with the search for an echo. And this zone would be where smart money should respond and move the price upwards. And now in the Bitcoin chart on an hourly basis, we can let go of this level. It has played its part in offering us these kinds of opportunities. We thank it, but until next time. And here the video ends. Can you imagine? Now in the order flow chart, notice in that bullish climactic action of Bitcoin, just like in Ethereum, see how blatant they are, right in our faces without disguising. See how they start selling what retail investors are clearly buying, because you know what retail investors say? Hey, look at how the price is rising, fool. Who doesn't buy it? That's the illusion created by major institutions so that retail investors think they have to buy. And that's where smart money sells everything. And hey, let's not compare this advanced analysis we offer in Crypto Insight with the nonsense we see on YouTube about smart money concepts. Alright, that has nothing to do with it. Okay, having said that, if we understand here that major institutions have induced retail investors to seek such purchases so that they can place all the selling, and remembering that if here we see climactic action with high volume with a large delta, and two candles later, we see a large candle reacting to the desires of money with a lot of volume and a delta oriented towards selling, then of course we are going to pay attention to this cluster where we see retail investors buying what they think, I imagine, is a small correction to go up. Clearly, this type of investor is not aware that we have experienced a tricky bullish climactic action. And here is where we see a large transactional volume where the retail investor is buying, as a result of which their account is in the negative, suffering losses because the market is falling. And when the price reaches that same level, that same investor who was buying at this yellow line, and the price continues below and they are suffering. As soon as the price reaches their break-even level, that same investor says, hey, I want to stop suffering, and I close that purchase. And when a purchase is closed, an order is executed. Hence, this zone has been so reactive, and this has been the point from which the echo of the bearish impulse started, which, to give you a little more context, we're talking about just analyzing this point here where the echo starts. And hey, look how curious things are. And that's a way of speaking that we were facing a clear defense zone. A very interesting zone, of course, on its own structurally to start selling. But hey, here we are adding a huge amount of information that supported us, those ideas we shared in the last video, to assess that bearish correction. And in the 4-hour Bitcoin chart, we are going to see something that will be very relevant to not lose perspective. First, on the price level of $60,000, we have this macro defense zone, a macro defense zone, which see how smart money has clearly and evidently set it for us, and how they have made the classic structural trap. A structural trap, which in previous videos you'll see that we were speculating about that possibility, and we were looking for the limit point with a structure in the form of a bearish channel, and there we identified it. And what I'm trying to tell you is that this structural bearish trap gives strength to a positive sentiment towards Bitcoin and the crypto ecosystem, of course. From a macro perspective, so without delving too much into the micro, hey, we're falling into a trap. They're easily seeking some sort of validation here, which they can do around these levels, which we'll go into detail about now. But they could also, of course, come to confirm the defense zone, and this would be very good to look for a reaction in Bitcoin's price. In other words, we can't be bearish in the ecosystem as long as this defense zone is not breached. So in Bitcoin, we'll continue to emphasize these levels, around $61,625 approximately, and also the defense zone. And as for Ethereum, of course, the current zone is a key reaction level. In fact, I showed it to you a moment ago, as in the 15-minute chart. Here, surgically, 4 things have already been done, and now, frankly, it's being seen whether this level will be respected or not. A key level, of course, like this one, for the same reason to stand here, so to speak, to play. More of the same here, and here we'll open the Bitcoin chart on the side to draw some interesting conclusions. Look, if Bitcoin wants to, it has that mini downside margin. That mini downside margin could make Ethereum go seek a defense zone that we place a little lower. See, perfectly, they could do it. Hey, that's a point I consider crucial for the crypto ecosystem in general, since it could be a reaction zone. We'll see if that's the case or not. Only time will tell us that, but it's worth considering that by price structure, Bitcoin, if it wants to, can expand and go seek the macro defense zone, a key defense zone to be defended by major institutions who are long here, which would simply make Ethereum revisit the defense zone without issue, and we'd still be protected to think positively, since smart money in this trap is defending that idea of prioritizing those long-term longs structurally. Therefore, as long as we don't lose those key defense zones in Ethereum and Bitcoin, the idea for the crypto ecosystem is positive, considering, of course, that we have those downside margins to go seek those defense zones if desired. Now, let me know in the comments what you think about the crypto ecosystem, and if you like the advanced technical analysis we do at Crypto Insight, give this video a like, subscribe to the channel, and click the bell icon to be notified of future posts, and share this content with your friends and other trading and cryptocurrency communities so that Crypto Insight reaches more people. You know, invest well informed, invest smart.